Hello, everyone, and welcome to another edition of the Forex Technical Market Update for the last day of June 30th, 2015. Okay, with all the Greek, so quote unquote, crisis that's happening and uncertainty that's that's surrounding the Greek debt situation, what exactly are the currencies doing, and what exactly are the technicals saying? And currently, the market is still in a consolidation pattern. This is a chart of the US dollar index, and this is a chart here of the euro. And as you can see, nothing much is happening. And fundamentally, you would expect that with all the crisis in Europe, the euro should be falling apart, and that is just not happening right now. Now, one view of it, all I really speak about fundamentals, but one view is that if Greece leaves the euro, then the eurozone as a whole will be strengthened because it won't have to deal with a very weak economy that Greece is. And the counter argument is that once Greece leaves the euro, then others may leave the euro with it, and the euro may eventually fall apart. So, those are the two arguments that are going on at the moment. But currently, the markets are not really doing anything, and I think it's more of a wait and see approach, and that's why whichever way the market breaks out of this consolidation, the move may even be stronger. And that's why there are opportunities now to make money in the markets once it starts trending. Remember, when there are crises and the entire world is panicking, those are the best times to make money in the markets because you can simply use good strategies and benefit from the crisis. So currently, support in the euro is at this trend line here, and we have another intermediate trend line that we can draw from here. It's a minor trend line, and it's more apparent on the 4-hour chart. So you have an inner trend line on the euro, and you have more of an outer trend line. And if we do break below this inner trend line, then it will challenge this longer term trend line in the euro. But as you can see, let me just remove this. We're clearly in a triangular consolidation pattern on the daily chart. And if we expand to the weekly chart, the consolidation pattern is even clearer. Now, the rule for consolidation patterns is that the market normally continues in the direction where it came. So if we're in a downtrend, the market will consolidate and then continue to the downside. Around roughly 80% of the time that happens. The other 20% of the time the market reverses. So that's the statistics there on these breakout attempts. Okay, so that is what's happening in the euro. We're down slightly on the day with the euro. Taking a look at the British pound, we are as of this recording, we're unchanged on the day. We have this doji candle here on the British pound. Looking at the 4-hour chart, we still have very strong support in this 156.50 area. I can draw here. We have strong support there. And if the market trades below that level, then we could see a further pullback in the British pound. We're still watching this reverse head and shoulders pattern on the larger scale. Left shoulder, head, right shoulder. And remember, with this head and shoulders pattern, the market could actually retrace all the way down to here and then go back up, and that will still be a head and shoulders pattern. So the market could retrace further from here, or it can continue rallying. Critical resistance is up at this 159 30 area, and support, as I said before, is at this red line of 156.64 on the British pound. The British pound is performing quite nicely against the New Zealand dollar, and we're making new highs in this market. It's a market that we have been speaking about in the daily updates for a number of weeks now. That there is a good opportunity here for those of you who are watching these daily updates and want to know, okay, where the next profit opportunities are. That this market definitely has done fairly well. British pound versus the New Zealand dollar. Another market that is trending and has just snuck above the old high that was made in February is the British pound versus the Canadian dollar. And this is also a market we spoke about, the fact that the market made a new high, retrace. So you have your A, B, C, and now the market is attempting to make a new high up to this D point on the British pound versus the Canadian dollar. And our portfolio for our members, we did not trade this because we are currently in two other British pound positions, and we don't want to over leverage the account. But for those of you who are just casually watching this and looking for profit opportunities, this was an excellent trade, which we called from roughly around the 186 area, and now we're at 195.94. That's just over 900 pips in this market alone. And that is the benefit of following these large trends, because you can get some large movements in the markets. Now, I know not a lot of folks teach following these large trends, and most folks teach very short-term trading. But the fact is that a lot of those folks that are teaching these methods, you have to wonder if they actually do manage money on behalf of clients. Because it's one thing to speak about the markets in theory, and it's another thing to actually manage money and have a client base that you have to account for. Because if your strategies don't work, then your clients will definitely know it, and it will be reflected in their trading accounts. And for our Signal members, we're having good success in the markets following these trends. Slow and steady gains are being made. Okay, taking a look at another market of interest is the euro versus the Canadian dollar. We see there are two ways to look on this market. You could look at this as the market. Okay, let's take a look at the longer term trend. The longer term, we had a head and shoulders top here. Left shoulder, head, right shoulder. The market broke down below this head and shoulders top, and that was in May of 2014. The market has been in a downtrend ever since. Now, what's happening now is that we're pulling back, but this also could be interpreted that we have another head and shoulders bottom here. This is the left shoulder, right shoulder, head. That's one way to look at it, but this market could very well continue down. Now, which direction? This is a classic example of which direction should you be favoring. And the answer is you should be favoring the downside. Why? Because the market is in a strong downtrend. And I can tell you, I have lost a lot of money trying to pick bottoms in these markets. It's always best to stay with the trend and then let the market prove to you that the trend has ended, and then you can hop aboard the reversal. That's the best way to trade these reversals. Let the market prove to you that it has in fact actually reversed before trying to preempt the reversal and losing out on and losing out on these trades. Okay. So I'm favoring the downside in this market, but we'll see if the market is able to turn around and take out this 142 high in the Canadian dollar versus the euro. Another market of interest is the Japanese yen versus the US dollar. And we see, let's go back to it. We see that the market is pulling back to this 50% retracement level that we were speaking about yesterday, and is finding some support. Now the question is, can the market break down below this 50% retracement level? And it's certainly attempting it right now. So we have support in the Japanese yen at versus US dollar at this 122 level, and the resistance is up at 124.50. Okay, we will continue watching how the euro reacts to this Greek crisis in the next couple of trading sessions. And before I leave, let me just take a look at the stock market. And we see that the S&P 500 was down big yesterday, and so was the Dow Jones Industrial Average, down huge on the day. But funny enough, the Dow ended the day right on support. You can see support in the 17,600 level. The market ended right on support and is currently now bouncing. So with the Dow, we have to see if the market is able to close below this 17,600 level. That will open up the 17,000 level, and if the market does close below 17,000, we could be in for a much larger pullback. So that's why it's important to look at these support and resistance levels in the markets. Now, if you want to take advantage of these exciting times in the markets, I can urge you to take advantage of our signals. They are automatically copied into your Forex brokerage account. If you don't have a Forex brokerage account, you can simply set up one within, I think to open an account takes just a couple of minutes really, just to open your account, and you can be up and running, because I can assure you we are going to have some explosive moves in the markets, and it's just a matter of taking action so that you can hop aboard and make money from the actions of the markets. If you would like to take advantage of the signals, click on the link below this video. It's right below this video, and get started. And I hope to see you tomorrow again. Thank you very much for listening, and have a wonderful day.